Now, some of you learned a new word this week while watching the jaw-dropping spikes and dips in the markets. Algos, right? Let me show you what some people say algos, or algorithmic computerized trading, accelerated this week. This is Tuesday, just a couple of days ago. The Dow opens at 9:30 a.m. Eastern Time, down, then 260 points. 30 seconds later, down more than 500 points. 5 minutes later, watch the Dow crawl back from session lows, even getting to losses of just 50 points, right? By 9:37 a.m. By 9:43, we're in the green, albeit briefly. This hyperspeed volatility has some people questioning whether algos are at the heart of these very fast-paced swings. Well, yesterday, Virtu Financial's Vinny Viola, one of the kings of high-frequency trading, played defense of the algos, which I said might attract the attention of Congress. We know Congress loves to regulate. Here's how it went down. You may have Congress breathing down your back, Vinny, and coming in with some type of regulation, because you know the government always inserts its nose into certain things.
Well, we welcome, listen, we are leaders in regulation. You know, my background is as an exchange leader and a regulator. We've always embraced regulation, and I think we've helped in any way we can to educate around these market structures. But quite frankly, Liz, I have to say I'm disappointed in you in this interview, because you know better. These markets are way more efficient.
You can be as disappointed as you want in me, but don't be surprised when, because I've seen it happen before, when Congress looks at something and tries to find a villain.
Never before have investors been able to access the market with as many specific market structures and instructions.
Right.
So investors could say, hey, I want to trade at this price and only at this price. And I don't want to trade in a flat technology environment.
So are algos the white knight here, the villain, or maybe a little mix of both? Let's bring in the experts. Nagy is a 30-year veteran of Wall Street and an expert in routing technology known as best execution. And Seth Merrin is the CEO of Liquidnet, a dark pool company which manages $15 trillion in trades for clients. Chris, let me get to you first. Do you take a side in this? Do the high-frequency guys have some role in the volatility we saw this week?
So Liz, as you pointed out, the markets have really whipsawed over the past couple of weeks. So let's talk about the good things that have happened. Back when we had the flash crash in 2010, we put in a number of plumbing fixes or infrastructure fixes into the marketplace. And by all accounts, those have really held up with the volatility. So we're not here talking today about stub quotes or flash freezes or quote failures or even busted trades. And that's a big underrated win. But what's been really bizarre is how these markets have been acting. And I think certainly algos footprints, or fingerprints rather, are all over this market, particularly if you look at Monday's trading, where you saw that huge 600-point drop in a matter of 5 minutes, followed by an equally impressive rebound. It certainly leaves some suspicion. The problem is that we don't really have an audit trail in the markets yet to be able to accurately find out why this happened or who's to blame for it.